Get ready, crypto fans, because the market is absolutely exploding with action. We've got seismic shifts happening, big players making moves, and futures that could redefine everything. From massive inflows shaking up exchanges to quiet revolutions in how global capital is being allocated, and even unexpected pivots into new digital frontiers, the pace is relentless. You're not going to want to miss a second of this as we break down the critical updates that are setting the stage for what's next. Stick around, because the Bitcoin Bulletin is live and we're diving deep into the stories that matter most right now. First up, a massive surge in whale activity is fundamentally altering the landscape on one of the world's biggest exchanges. We're talking about average deposit sizes jumping dramatically, signaling a huge influx of institutional and high net worth capital. This isn't just a ripple, it's a tidal wave that's boosting liquidity and setting new benchmarks for large-scale trading. What does this mean for Bitcoin's price and the broader market? We've got the exclusive breakdown. Then, we're exploring a quiet revolution that's reshaping global capital flows. Think about how major institutions and even countries are starting to view digital assets, not just as speculative ventures, but as strategic reserves. This shift is subtle but incredibly powerful, potentially unlocking vast new pools of investment and altering traditional financial paradigms. We'll uncover the implications of this growing acceptance and its impact on traditional markets. And if that wasn't enough, we're witnessing a bold strategic pivot that could unlock significant institutional-grade growth potential. This move into a new, high-impact sector is already generating buzz, with analysts pointing to massive upside. We'll explore the details of this transformation and what it means for future market dynamics. Don't go anywhere. Like, subscribe, and hit that notification bell so you don't miss a single update. Whale dominance on the rise. The cryptocurrency market is experiencing a significant shift in its power dynamics, with major players, often referred to as whales, dramatically increasing their activity on prominent exchanges. Specifically, Binance, one of the world's largest cryptocurrency trading platforms, has seen a substantial surge in Bitcoin deposits from these large-scale investors. Data analyzed by CryptoQuant reveals a striking trend. The average size of Bitcoin deposits into Binance has escalated from a mere 0.8 Bitcoin in early 2024 to an impressive 13.5 Bitcoin by late 2024. This dramatic increase signifies a profound change, indicating that institutional investors and high-net-worth individuals, HNWIs, are now playing a far more dominant role in market movements. This heightened whale activity directly impacts Binance's standing as a premier trading venue. As the exchange with the highest trading volume globally, Binance offers the essential liquidity required for executing substantial Bitcoin transactions with minimal market slippage. This capability makes it an increasingly attractive platform for whales who prioritize efficiency and the ability to move large amounts of capital without significantly impacting the price. Industry analysts interpret this structural shift as a reflection of broader market trends, including the accelerating pace of institutional adoption and a growing number of significant market participants accumulating Bitcoin in anticipation of potential market turning points. Market participants are closely monitoring Bitcoin's price action, which is currently navigating a critical juncture around the $110,000 mark. This level is viewed as a crucial support zone, and a breach below the 200-day moving average, situated near $111,700, could expose the cryptocurrency to further downside pressure. Conversely, a successful recovery above $112,000 might signal the reemergence of bullish momentum, potentially paving the way for a retest of key resistance levels around $115,000. The heightened presence of whale activity on Binance could amplify the significance of these price levels, as large investors are likely to strategically position themselves based on a combination of technical indicators and prevailing macroeconomic factors. The evolving market structure is also being shaped by broader macroeconomic expectations, particularly the anticipation of rate cuts from the U.S. Federal Reserve. A reduction in interest rates typically enhances investor appetite for riskier assets, making cryptocurrencies, known for their historical volatility, more appealing. The market has already demonstrated sensitivity to signals of monetary easing, with Bitcoin and other major cryptocurrencies like Ethereum showing positive responses to earlier commentary from Fed Chair Jerome Powell. In this context, the surge in whale activity on Binance could further exacerbate price volatility, especially if major market players align their strategies with expectations of a more accommodative monetary policy. Looking ahead, the potential approval of exchange-traded funds, ETFs, for altcoins later in 2024 could significantly influence the market's future trajectory. Regulatory advancements in this area have already fostered optimism, leading investors to speculate that a similar influx of institutional capital, mirroring the impact of Bitcoin ETFs, could extend to other prominent cryptocurrencies. This development would likely boost demand for Bitcoin on platforms like Binance, where robust liquidity is a critical asset for large-scale traders. As the market continues its dynamic evolution, the interplay between whale activity, regulatory developments, and macroeconomic shifts will remain pivotal in determining Bitcoin's price trajectory. But that's just the beginning of the financial evolution we're tracking. Next, we're diving into how global capital is quietly being reshaped by a digital revolution. The digital gold rush continues. In a significant development that could fundamentally alter the global financial landscape, Bitcoin is increasingly being recognized and adopted not merely as a speculative asset, but as a strategic reserve asset by corporations and even nations. This growing acceptance marks a pivotal moment, signaling a potential paradigm shift in how capital is managed and allocated on a worldwide scale. The quiet revolution is unfolding as more entities begin to integrate Bitcoin into their balance sheets. Driven by a combination of factors including inflation hedging, portfolio diversification, and the pursuit of higher yields in an era of fluctuating traditional markets. This trend is particularly evident in the increasing number of companies adding Bitcoin to their treasury reserves. While early adopters like MicroStrategy and Tesla paved the way, a growing cohort of businesses, from publicly traded tech firms to private equity funds, are now exploring or actively acquiring Bitcoin. This move is often underpinned by a strategic vision to protect against currency devaluation and to tap into the potential of a decentralized digital asset that offers uncorrelated returns to traditional asset classes like stocks and bonds. The sheer volume of corporate interest suggests a maturing market, where Bitcoin is shedding its image as a fringe technology and establishing itself as a legitimate store of value and medium of exchange. Beyond corporate treasuries, the potential for national-level adoption is also gaining traction. Several countries are exploring or have already implemented policies that embrace digital assets, with some even considering Bitcoin as legal tender or as a component of their national reserves. This governmental interest, though still in its nascent stages, carries immense implications for global capital flows. If more nations begin to hold Bitcoin, it could lead to a significant reallocation of global wealth, potentially de-emphasizing traditional reserve currencies and increasing the demand for Bitcoin as a global, borderless asset. The implications for traditional financial institutions are also profound. As institutional interest grows, banks and asset managers are increasingly pressured to offer Bitcoin-related products and services, such as custody solutions, trading desks, and investment funds. This integration is crucial for unlocking broader market participation and facilitating the flow of institutional capital into the digital asset space. The development of regulated products like Bitcoin ETFs has been instrumental in this process, providing a familiar and accessible entry point for a wider range of investors. This broader adoption is not without its challenges, including regulatory uncertainty and market volatility. However, the underlying trend points towards a growing conviction in Bitcoin's long-term value proposition. As more capital flows into the ecosystem, driven by both corporate treasuries and potential national reserves, the infrastructure supporting Bitcoin is likely to strengthen, further solidifying its position in the global financial architecture. The quiet revolution is, in essence, the gradual yet persistent integration of Bitcoin into the mainstream of global finance, reshaping capital allocation strategies and challenging long-held assumptions about value and reserve assets. This strategic integration is fundamentally changing investment plays. Now, let's look at how one company is making a bold move into a new digital frontier. Cango's bold mining venture. In a significant strategic maneuver that signals a major shift in its business model, Cango Inc., a leading automotive distributor in China, has announced its decisive pivot into the Bitcoin mining sector. This move represents a bold step beyond its traditional automotive distribution and financial services, venturing into the high-growth, albeit volatile, world of cryptocurrency mining. The company's decision to allocate substantial resources towards establishing and expanding its Bitcoin mining operations underscores a clear intent to diversify its revenue streams and capitalize on the burgeoning digital asset economy. This diversification is particularly noteworthy given Cango's established presence in a highly competitive traditional market, suggesting a forward-looking approach to future growth opportunities. The company's strategic pivot is underpinned by a multifaceted plan that includes acquiring Bitcoin mining equipment, establishing mining facilities, and optimizing operations for maximum efficiency and profitability. Cango aims to leverage its existing business acumen and financial management capabilities to navigate the complexities of the mining industry. By investing in state-of-the-art mining hardware and employing advanced operational strategies, Cango intends to position itself as a significant player in the Bitcoin mining landscape. This initiative is not merely about entering a new market. It's about building a robust and sustainable mining business that can contribute meaningfully to the company's overall financial performance and shareholder value. Cango's foray into Bitcoin mining is also driven by the potential for substantial institutional-grade growth. The Bitcoin mining industry, despite its inherent cyclicality, offers significant profit margins, especially during periods of favorable energy costs and increasing Bitcoin prices. By securing access to competitive energy sources and strategically locating its mining operations, Cango aims to achieve cost efficiencies that are crucial for long-term success in this capital-intensive sector. The company's financial projections likely anticipate a strong return on investment, fueled by the increasing demand for Bitcoin and the potential for operational scale. The market reaction to Cango's announcement has been largely positive, with investors recognizing the potential for a significant uplift in the company's valuation. Analysts suggest that this strategic pivot could unlock new avenues for growth and profitability, potentially repositioning Cango as a hybrid entity with exposure to both the automotive and digital asset sectors. This dual focus could offer a more resilient and diversified investment profile, attracting a broader range of investors interested in both traditional industries and emerging technologies. Furthermore, Cango's move into Bitcoin mining aligns with a broader trend of traditional companies exploring the cryptocurrency space. As the digital asset ecosystem matures and regulatory frameworks become clearer, more established businesses are likely to follow suit, seeking to harness the opportunities presented by blockchain technology and digital currencies. Cango's pioneering approach in this regard could serve as a blueprint for other companies looking to diversify and innovate in response to evolving market demands and technological advancements. The success of this venture could not only benefit Cango, but also encourage further integration of traditional businesses with the cryptocurrency economy. This strategic pivot highlights the evolving landscape of digital asset integration. Now, let's explore how another innovation is making institutional access to crypto even smoother. Ethereum ETFs unlock new avenues. The world of cryptocurrency investment is undergoing a rapid evolution, with the recent development and potential approval of Ethereum exchange-traded funds, ETFs, poised to significantly reshape crypto allocation strategies for institutional investors. Following the landmark approval of Bitcoin ETFs, the focus has now shifted to Ethereum, the second-largest cryptocurrency by market capitalization. The prospect of Ethereum ETFs offers a regulated and accessible pathway for a wider range of investors, including large financial institutions, pension funds, and asset managers to gain exposure to Ether, ETH, without the complexities of direct ownership and custody. This development is particularly crucial for unlocking institutional-grade Bitcoin exposure, as the infrastructure and investor appetite being built for Ethereum ETFs often mirrors and complements that for Bitcoin. As regulators become more comfortable with the concept of crypto-backed ETFs, the approval of Ethereum-based products is seen as a natural progression. These ETFs would allow capital to flow more easily into the crypto market, providing liquidity and potentially driving up the value of the underlying assets. For institutions, this means a more streamlined process for incorporating cryptocurrencies into diversified portfolios, aligning with fiduciary duties and risk management protocols. The implications extend beyond just price appreciation. Ethereum ETFs could foster greater innovation within the Ethereum ecosystem itself. With increased investment and attention, there's potential for accelerated development of decentralized applications, dApps, Layer 2 scaling solutions, and other advancements that rely on ETH as the native currency. Furthermore, the listing of these ETFs on major stock exchanges would increase the visibility and legitimacy of Ethereum as an asset class, attracting a new wave of retail and institutional interest. Market analysts are closely watching the regulatory landscape, anticipating that the approval of Ethereum ETFs could create a domino effect, paving the way for ETFs of other digital assets in the future. This would signify a broader acceptance of cryptocurrencies as a legitimate investment category. The success of Bitcoin ETFs has already demonstrated the immense demand for regulated crypto investment products, and the same enthusiasm is expected to translate to Ethereum, potentially leading to significant inflows of capital. For investors, the availability of Ethereum ETFs represents a significant opportunity to diversify their portfolios with a digital asset that has a robust ecosystem and numerous use cases, including smart contracts, decentralized finance, DeFi, and non-fungible tokens, NFTs. The ability to gain exposure through a familiar financial instrument like an ETF simplifies the investment process, lowers the barrier to entry, and provides a level of security and regulatory oversight that is often sought by institutional players. This move towards greater institutional adoption is a key indicator of the crypto market's maturation and its increasing integration into the global financial system. This innovation is making digital asset investment more accessible than ever. Join us next time for more groundbreaking updates shaping the future of finance. All right, that's a wrap on today's explosive news. We saw whale activity surge on Binance, signaling big institutional plays. Bitcoin treasuries are quietly revolutionizing global capital flows. Cango is making a bold pivot into Bitcoin mining, unlocking massive growth potential. And Ethereum ETFs are set to reshape crypto allocation strategies, opening doors for more institutional access. Don't miss out on the next wave of updates. Smash that like button, subscribe to Bitcoin Bulletin, ring the notification bell, and follow us on all socials to stay ahead of the curve. We'll see you next time.